How's it going, traders? Today is 2nd of September 2019. We had a monthly candle closure 2 days ago and weekly candle closure yesterday. 2-day and 3-day candles closing as well. Couple of things to talk about that means, right? But I'll start off with the monthly today, as we are definitely going to be putting a lot of weight into the bigger posture. We'll get rid of the wicks just to have a even better picture in the price action. What do we have? We have no moving average, we have no wicks, we have just the candle closure and the volume signature going on, right? So if you simply notice this kind of price action without the wicks, what is this? This is simple proper consolidation. It's not bullish, this is not bearish. It's just that the price literally skyrocketed the previous 5 months, so it needs some kind of consolidation. It needs some kind of sideways action, right? Because of the moving averages. The moving averages have not yet caught up. They are lagging behind by a very significant margin. So since the moving averages are lagging behind, the price action would simply stall in these regions, kind of go sideways, and will get reaccumulated. Nothing is bearish, nothing is bullish, it's just reaccumulation. So I would suggest you also keep on stacking BTC all the way until the 200-day moving average. As far as the price stays above the 200-day moving average, Bitcoin is going to get reaccumulated and it's not going to dump probably. It's not going to go below 200-day moving average just like that. The bears have to do a lot of work to make that happen. Anyway, that's going to be a point of discussion when we go to the daily time frame. But talking about the monthly, this is simple consolidation. This is what we can see. Just for fun sake, if we take the retracement, we never made our way to the 70.78 Fibonacci retracement, although these are not wicks. Anyway, just for fun. That was just for fun. I don't know why I did that. Yeah, so I had to talk about the 21 moving average on the monthly time frame, as on the previous consolidation pathway we had two confirmations, two tests on the 21 monthly moving average, as the moving average was kind of sloping downwards. We have a similar posture in the monthly moving average. It is sloping downwards. However, the candles are really far away from the 21 moving average. And can you consider this as a test of 21? Maybe you can. Some exchanges like BitMEX, like where people literally overreact, would have wigged to the 21 monthly moving average. But I think this can be considered as one of the tests. So just taking this fact as a big decision making thing for me personally, I'm not going to be waiting for the price action to test the 21 moving average on a monthly all the way to buy Bitcoin. I would just scale in. I would constantly scale in all the way until the 200-day moving average. Now again, that's going to be what we'll be talking about very soon. Yeah, so pretty much that is it for the monthly picture. It is just simple consolidation, and this monthly candle never really wigged below the previous monthly candle's price action or even this candle close. So yeah, it's consolidation. So I'll just quickly head on to the weekly time frame. Now I want to be talking about a few momentum oscillators on the weekly time frame, which seem to be a necessity since we have been talking about the price action, and since everybody's been talking about the price action every single time that we are above 21 moving average and we are consolidating, blah blah, right? So how can you figure out the trend in advance? Like, how can you figure out that what is going to come next? It's going to be your momentum oscillators, as simple as that. The stochastics are seesawing around, completely getting destructed and getting rejected from the 60 regions. So stochastic kind of unable to maintain the bullish posture, kind of like what we had back in the previous bull cycle. Stochastics never went down never closed below 40. In fact, we are testing those levels currently. I mean, you don't want this week to turn out bearish again, because this would really break a few things. It would kind of break a few things in terms of the stochastic oscillation, and would mean some different kind of conclusion. Anyway, going on to the RSI, which is the black line, um, it still is maintaining a good posture above the 55 mark or the 50 mark as well. Anything above 50 is kind of sideways to bullish, and anything below 50 to 40 is kind of slipping into the bear control zone. So this is good consolidation, and the price still stays at bull consolidation. Just it's at bullish control. No damage has been done yet, and we're still looking to consolidate, and people might be still looking to buy the dips. That's all what it suggests. Well, I think that is pretty much it about the weekly. Heading on to the daily time frame. Now this is where I want to be talking about a new rectangular transformation of the price action from the previous triangle formation. These patterns are quite funny. You can literally make new patterns every week or so. I mean, price action would resolve itself and form a new I don't know. So anyway, on the smaller picture, we do see that 3 candles have been confirming above this particular support area, which was resistance, support, and now again acting as a support, which is good to see. So now I expect the price to test the 100 simple moving average, which is at 10,100 regions, and the price action might test the 50 moving average as well, which is the highest on the daily time frame right now, which is somewhere around 10,500 regions. Now we want to be looking at this kind of. However, the 21 and the 100 death cross is kind of insignificant. It's just a small bear cross, and price could get just accumulated whenever we have this bear cross happening, which is going to be happening in 2 or 3 days, right? Okay, so what I want to be comparing today is this particular triangle with the price action all the way from November 2015 to the May of 2016. We kind of had a roof going on, a straight roof. Price was unable to break above it, and price was unable to break below it. So we have a pizza. We do have a pizza going on here, and this pizza broke to the upside. Interesting. So if we actually took the major move, it was not once. I mean, it did hit the major move perfectly to the wick, but it went for another run. I think it just 2x'd in its take profit areas, right? I don't expect the price to literally repeat the same thing, but you can pretty much get the picture from November all the way to May. This is somewhere around, let's just go on to the date range. So price was kind of consolidating for nearly 200 days, man. This is like more than 6 months. Yeah, more than 6 months is a big time for consolidation. What do we have on the current structure? This structure could get resolved somewhere during November. Now again, since we had a new formation, new triangle, new target, new sideways action, so I can see its apex all the way somewhere around November, right? What time duration is that from the starting of this triangle? 160 days. This is more than 5 months. More than 5 months is what we are looking at, and price can simply consolidate as far as we stay and maintain a good posture above the 200 daily moving average. That's what we have to really look at. Now this reminds me to draw a little demand zone, which is going to be insanely strong. Seriously, I mean, it's going to be insanely, for obvious reasons. 200 daily moving average is kind of significant, and there is a lot of price action going on these reasons. If you put on the VPVR as well, you might see a lot of volume confluent zones, and I do expect the price to just get picked up from these levels if we do break this triangle. And again, the weekly candle might give a wick below the 21, but ultimately close above it. This is what we're looking at. We are looking at 2 important decision points, which is a weekly candle closure maintaining a weekly candle closure above the 21 simple moving average, and maintaining a daily candle closure above the 200 moving average. These are the two most significant things that we are looking at. Closures below 200 daily moving average is going to be lethal for the price action, and closures below 21 weekly is yet again going to be lethal for the price action. So yeah, those are the point of interest, and in the current situation we do have ascending triangle, and now I do want to measure the breakout target, comparing it from the previous triangle. It can subject to changes, of course. It can change, it can fuck around a lot, it can do a lot of things. This market is driven by emotional traders and so many other things. Anyway, so if we take twice the breakout target, we get 18,000 to 18,000ish areas, which is kind of correlate to the previous all-time highs, the BTC US dollar all-time highs. So that's might where we break out to, stall over there, kind of test the prices below first, and kind of test this breakout first, and then head up higher. But as far as this entire structure goes right now, it's just a fact that the price rose so quickly. Price went 4x so quickly that these moving averages were unable to catch up. That's all. These moving averages were unable to catch up with the price action, literally going parabolic. So these are the reasons why this entire picture is kind of consolidation. Because if you'll be looking at any price action literally doing a 4x in 3 to 4 months, it's going to be the moving average they are going to lag behind by a big margin. That's what's going on here. That's all that is. And me personally, I would definitely consider a long in these regions if we get rejected by the 100 and come back to test these regions. However, I'm interested in these regions too long. The funding is kind of like towards the bulls and usually, it's just as far as my experience go, usually when the funding is against any bear or bull, the price action would flow in a different direction. Like if the funding is kind of bearish, the price would go bullish. If the funding is bullish, the price might go bearish, because that's what the masses are doing, right? Anyway, that's a topic of another conversation, another video, another day. I do have a lot of contents coming out, and a very important video on its way. I'll call it Fibonacci circles done right. Let's see how it goes. For the time being, I am really interested in longing these regions, and let's see how we test the daily moving average, because since it broke the daily 100 moving average, this was kind of bearish. This was not good. This was definitely not good. But if we are able to put a candle above 100 moving average and get this car going again, then we are good to go. Then we'll be having something like this all the way up until these regions, 11,200, 11,300. Anyway, that's my personal opinion. You should not trade anybody else's opinion. You should do your own due diligence and your own research. That's how you trade the market, not by following signals. Anyway, that's been it for today's video. I did speak of a lot of things, I believe. I hope you gained some kind of value out of it, and I'll catch you guys on the next one. Thanks for watching.